Welcome to the January 18th edition of Markets Demystified from ESOP Advisor, LLC. I'm your host and the owner of ESOP Advisor, Jonathan Oden. This edition, Inflation Frontlines, Soft or Hard Landing. Pilot Powell. Federal Reserve Chair Jerome Powell, a Trump appointee, made it clear throughout last year that taming rampant inflation was top priority for the Fed, and that prices would be reined in even if measures taken to do it resulted in a recession. For most of 2022, market participants were trying to assess the likelihood and potential severity of an economic downturn inflicted by the Fed embarking on its fastest rate of interest hikes since the 1980s. Now, after 7 hikes totaling 4.25%, the chance may be beginning to appear that the Fed may be able to reduce inflation while steering clear of a damaging downturn, with clear signs emerging that the series of steep hikes are having the intended effect of cooling spending, all while the labor market remains remarkably resilient. Bad is good. Markets have been in a bad news is good news mood, with positive news of economic growth souring investor outlooks by raising the chances the Fed will have to keep making aggressive rate hikes to cool things down. In seemingly counterintuitive moves, markets have been rallying on negative economic news as it may decrease the Fed's aggressiveness. Worker pay raises have been seen as one of the primary drivers of rising prices. Earlier this month, investors cheered wage growth moderation as increases in average hourly earnings fell for 3 straight months and made their smallest year-on-year increase since August 2021. Investors also reacted positively earlier this month on news U.S. consumer prices fell for the first time in more than 2.5 years when economies were reeling from the pandemic. It was the 3rd straight month consumer prices were lower than expectations. Markets rose on another report this month showing the U.S. services industry shrunk for the first time since the pandemic. Outside the pandemic-induced slump, it was the weakest services level since late 2009. As the services industry makes up more than 2/3 of U.S. economic activity, this report may have been another significant signal that rate hikes are making an impact. Phantom recession. Although high-profile layoffs in specific industries such as tech and interest rate-sensitive sectors like finance and housing are making headlines, other parts of the economy still have not recovered their pre-pandemic number of workers. Despite what seems to be a persistent belief that a recession has already arrived, the labor market has remained robust, even in the face of fierce Fed rate hikes. As of November, there were 1.7 jobs open for every unemployed worker, and the unemployment rate remains at its lowest level in 5 decades. New jobs continue to churn out, with an average of 375,000 new jobs created every month in 2022. Unemployment claims are also in line with pre-pandemic levels. Lag time. Markets seem to be accepting that inflation has likely peaked. After climbing to 9.1% in June, the steepest increase since 1981, prices have shown signs of cooling off. It may not be possible to know for sure if a recession will result from the Fed's rate hikes, as there is a lag time before hikes take full effect. Though prices are moving in the right direction, there is still a ways to go before inflation reaches the target of 2%. Will inflation fall fast enough for the Fed to end their rate hike frenzy before the economy stops creating jobs and starts losing them? The movement of stocks may depend on how these factors play out and on how long bad news remains good news. Though there seems to be growing confidence that any upcoming recession will be relatively mild, if one happens at all. If so, then the Fed will have touched down on the runway for a smooth, soft landing. Thank you for listening to Markets Demystified from ESOP Advisor LLC, where we relate investing to personal money management. Visit us on the web at esopadvisor.com. That's AESOP advisor.com, or call us at 940-268-4161. The preceding information is not meant as individual investment, legal, or tax advice. ESOP Advisor LLC advertisements are for informational purposes only and are not recommendations to buy, sell, or hold any asset. All investments involve risk, and the past performance of a security or financial product does not guarantee future results or returns. While diversification may help spread risk, it does not assure profit or protect against loss. ESOP Advisor LLC does not provide tax or legal services.